You can't be going for like an extra 1% in income. That's ridiculous. And guys that try to replace for that, in my opinion, shouldn't be licensed. So. Hey there, my name is John Stevenson, the Guaranteed Retirement Guy. Thanks for tuning in today. I'm going to talk to you about a special case that I just did. It was an annuity replacement. In fact, I replaced 5 contracts. And again, I'm just disclaimer here, I don't usually like replacing annuity contracts because there's surrender charges involved and I don't want people to lose money, okay? And so it has to be something that is in your best interest in order for us to do it, okay? And rule of thumb, don't replace annuities if you don't have to, okay? A lot of guys will do it because they want to earn commissions, and especially if it's from a client that they sold a couple years ago, they'll replace them again. But in my opinion, it's not a good practice to try to do that and try to target people for doing that all the time. But sometimes people want their policies replaced. Sometimes they want, they want better income. If they can get better rates, they want to do it. And so that's why I'm making this video. So if you're thinking about replacing a policy, I'm going to kind of tell you how it works. So we replaced 5 policies, okay? Now this couple, they were looking for higher income. That was their main objective, was higher income. They were okay with losing some of their account value if it meant that they got higher overall income and a higher overall return for their retirement. That's what they wanted, okay? It was not for legacy. It was not for growth in the account value. It was for income. So they had about a 10.2% surrender charge when it all came down to it. And these were 5 contracts. 4 of them were the wife's contracts and 1 of them was the husband's. And so we compared every single one of those contracts individually. And then of course, when we did the replacement, I took 4 of her contracts, put them into 1 contract, combined them into 1 for her. And then I took his 1 contract and of course, put it into a new one for him. Okay, so there were 2 new contracts that replaced those 5. The income was 15% higher than what they would receive if they would have kept their current contracts. So it was absolutely better. And the new annuity contract gave them a 10% premium bonus. So it basically brought them almost, not quite, but almost up to where they were, making them almost whole. So they didn't lose very much. And when you do replacements, you usually have to do that. You usually have to have some sort of premium bonus, or the new insurance company, the annuity company, won't take it. So they have basically rules where it's like, all right, they got to have higher income. It's got to be a lot better for them. We will only accept up to a certain amount as far as a loss. And in this case, the only amount, I think the highest they would accept was a 6% loss. But in this case, they really had a really, really small percentage of a loss. So I guess my question to you is, would it be worth it to you to lose a 1/4 of a point to gain 15% more in income a year, guaranteed for the rest of your life when you start taking it? Well, for them it was. And in my opinion, it is absolutely would be worth it. So it really depends on what you're looking for. If you're looking for account value growth and preservation, don't do it. Probably an annuity replacement is not for you. Sometimes it is though, depending, because maybe your account growth is not, maybe it's not doing anything at all. It's horrible. And there's some better indexes out there that you could be doing better at. Sometimes that's good. But for income, you have to make sure if you can get a premium bonus, you need to get it, okay? And of course, if you're looking for income, you have to absolutely make sure you have higher income. And it's got to be a substantial margin. You can't be going for like an extra 1% in income. That's ridiculous. And guys that try to replace for that, in my opinion, shouldn't be licensed. So if you want to see what annuities are available right now, go to my website, johnstevenson.com, and you'll be able to see everything that's available. You'll see my annuity calculators. You can book a call with me if you'd like, and we can sit down and I'll answer your questions. And of course, there is a link below this video. It goes directly to my calendar as well. So anyways, it's really cold and I am done. I am going to go back home and see the kids and see my wife. But I still wanted to get up here and I wanted to show you everything and why it's so beautiful out here. Even though it's frozen, it's beautiful. So anyways, thanks again for watching and we'll see you next time. Hey, I really appreciate you watching the video today. If any of it makes sense to you, or if you found value, or if you even got a question about anything, I hope that you'll go to the comments section and ask it. There's no stupid question, and I'm looking forward to hearing from you.